From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for July 21st, 2017. In a moment we'll be taking a look at the AUDUSD, the Australian versus the US dollar, for today's trade analysis. But first, a recap of yesterday's trade suggestion on the GBPUSD, Greater British Pound versus US dollar. We're looking at the 4-hour time frame here. Yesterday we were looking for an opportunity to go long in the direction of the trend. You can see the red trend line here showing the direction of the trend into support, which is the green shaded area between 129.35 and 129.65. We had some backup of Fibonacci at the bottom of that green zone, so we were looking to buy into that support level. As you can see, we do have that trade going down here at the bottom of the chart highlighted in blue. 1.2940 was the entry, currently sitting about 57 pips of profit on the trade. We've seen a tad bit more than that as it touched into the purple shaded area, 1.3005 area, just above 1.3000. It's pulling back off of there a little bit. That's okay. We have moved our stop loss to protect profit. We've actually locked in 15 pips of profit. I've closed some of the profit because we reached the first profit target. The purple zone was our first profit target to make a trading decision from buying at the green shaded area. Of course, if today we see another push through the purple zone, we'll look at our secondary target at the orange shaded area, 1.3070 to 3100. So still watching this, looking for another surge higher for the pound dollar. Otherwise, a turn back down toward the green zone, we could be taken out, but of course we've already locked in 15 pips and can't lose on the remaining portion of the trade. Let's move on over to the AUDUSD. I want to discuss the potential for two different outcomes. At each one of these colored shaded areas, I expect there's two potential outcomes. It's either going to bounce off of it or it's going to break through it. Well, as we look at this orange shaded area at the very top of the chart between, we'll call it 0.7910, 0.7955, that's the orange zone. We know we're at a multi-year high. What do I mean by that? We're looking at the weekly time frame. Back here to the left-hand side of the chart, the red vertical line shows that's back in May of 2015. So the last time we were into this price level was May of 2015. You can see where the blue circle is. We found several weeks, or a couple of weeks at least, where we found resistance and reversal went back down from this orange shaded area. So we know historically that this is factually a significant decision point, and the fact that it's a multi-year high really gives us a pause about buying it, pausing to buy it, because right now we're obviously finding resistance underneath it. The next resistance level, of course, would be all the way up into the 8,000s for the Australian dollar. Let's move it on down to the daily time frame, get a little bit closer to our market, and look at what's been happening the past couple of days. Of course, we hesitated for a period of time here, right here where the little black circle is, right around the yellow shaded area, top of a multi-month range, 7,800, 7,830. Hesitated there for a couple of days, shot through it, and now at the orange zone. Take a look, 1, 2, 3, 4 days now, just kind of bouncing around and stuck inside this orange zone between 10 and 55. So as yesterday in the trade room, we discussed the potential. What is the potential here? It's either going to break above the orange zone in a trend continuation, or it's going to break below as a trend reversal. If it breaks below, we already know the next area to go would be the yellow zone. If it breaks above, we already know the next area for it to go would be the blue zone. So really we need to watch for one of two outcomes here. It either breaks above or below this orange shaded area. And you can see the past 3 days have so far been contained inside this orange shaded area. So the safest move here for the Australian dollar is waiting for a breakout of this orange zone, either a break to the bottom side to go lower or break to the top side to go higher. As we can look at the past 2 days, well, we'll just take all 3 days. Today, yesterday, the day before, blue candle rising from the bottom to the top of the orange zone. A small bodied candle with a large wick on top and bottom, some indecision, some confusion by the buyers and sellers. Should we continue higher or should we reverse? And now suddenly we see this infusion of sell orders. This infusion sell orders going all the way back from 55 down to 10. That gives me a little bit of an expectation that we might look for some further pullback, but the trigger, the key point to that, will be the breakdown underneath 79.10, and it hasn't done that. You can see it's challenged it, it's tested it, little wick sticking down underneath the orange shaded area, but it has not broken it. So what is a breakout? For me, that's going to be an open and close underneath the orange shaded area. Let's take it down to the 4-hour time frame. And even as we get down here to this time frame, we can see the challenges above the orange zone, the challenge below the orange zone, but no real deal breakout. It's been false breakouts so far. So that's the next move that we need to see, to have confidence in either the continuation higher or the reversal to go back down. A break of this orange zone will give us confidence to take the next move on the Australian dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.